Hello again. In the last video, I talked about how the long-term story is really important in order to think about investment. And I promised you I'm going to talk about Apple, the case of Apple, how this company is heading towards $3 trillion and God knows where, right? What exactly is the perception of the market and can it sustain it? Now, in order for me to be fully on board Apple cart, I have to have that story. If I don't, then I should not be investing. I can trade with it, but investment requires that I actually look at what's under the hood when it comes to this company, right? So we want to look at that, some of the numbers. So there are different ways to analyze a company. I would say this is one concept. You can look at the market capitalization, which is basically what you're doing there. You're looking at the financial numbers. You crunch the numbers and you get what's the value that the market believes this company's stocks can add up to. Here, I'm showing you the brand's value. Brand's value is a new concept. It's not a new concept. It's a different concept. So what brand actually determines? It determines the loyalty. It determines the stickiness of the customer, which is one of the main component which will allow you to ascertain if this company is going to be around with the profitable form that it is today. So in case of Apple, you can see it's unlike, it is the most powerful brands in the world by far, by a long shot, right? You can look at the Google, Microsoft, Tencent, and rest. They are nowhere close to it. Google, because Google is really part of so many different spheres and ecosystems. So that allows Google to actually compete with it. But Apple in pure form as a product company, product-based company, it is, and they've got a lot of things at the back end of the product that they offer. So this is phenomenal. And there are many ways you can actually determine, you can calculate this brand value. But I would say, I mean, it's not related to the financial performance. It is, but it is more to do with how the customers are willing to shell out that extra amount of cash on buying something like Apple, right? Because pricing is, and the huge margin that this company enjoys is quite phenomenal. I've done a case for 2017, Apple's profitability for that product. Like, they have come out with iPhone 7 and that phone was selling for 695 or 45, I don't remember, dollars or euro. They keep the same price right across, and their actual cost of producing those in China was around $243 per unit. So the company was making per unit about $420 profit, right? You can't put that right off the bat because there is a production cost. That is a production cost, but then logistics and running their stores and running innovation and all those things. I think the other cost, if you were to add to it, it would come. Still, it's a huge margin business that they are in, and they command that premium pricing, right? So this is where, if you look at the global IT, so you can actually look at what has been the trend in terms of what this company makes, right? This is what you see with that. What you will notice is it has actually come to, this is a smartphone, the bread and butter of Apple. Apple gets almost 60% or 50%, we'll see from one smartphone business. That's the most important aspect of their business. What you notice is there are years when this sales has gone up tremendously, like 2018. And you'd like to believe that Apple is the biggest winner because of the biggest margin that they have vis-a-vis that product. What happens in 2018? And in order to answer that question, there is a sudden urge and then it goes down, even though Apple has tried to create this life cycle of a product, 1 year life cycle, and they would like their customers to change their phones as frequently as possible. People have realized, and the life cycle of these phones have actually gone, product life cycle has actually gone longer and longer. People are holding their phones. They don't realize that the new phones, they don't believe new phones add too much of functionality. And as a result, so sometimes a lot of these things come together, and that's what you see in 2018. There were new innovation, there was, and all that could actually give some partial fillip to the market. And again, we're talking about all the tablets, PCs. We're not completely company agnostic. And then you come to the financials, right? That is important. That's what people are looking at. And so you see this big bump in the last 1 year period of time, TTM, right? Trailing 12 months. It's amazing what's happening. And the reason they have been the biggest beneficiary of the lockdown, because a lot of people, they couldn't spend their money on other usual spending. They were at home, and we know who the target customer of this company is. These are people who are in the middle class or upper middle class. These are not poor people, right? So poor people have lost out in the Corona period, but the middle class has either hold on to their money. Some of them, obviously, they've gone affected by it. But what happened? A lot of people, they could not go and travel and spend that money. So they felt that they need to do something. And Apple was the easiest thing to spend on, it seems like. So a lot of people have moved up from other devices to Apple's devices. And that's what you see here. Their revenue has been tearing up. And that's what you see also appearing on their. Now, it's interesting, if you divide their revenue in the quarterly terms, it's easy actually to analyze this company, because the quarter when they announce a product and they launch a product, that's after the quarter that comes afterwards is where you find their revenues. They just go up, right? So these small, the tall skyscrapers that you see every time is the quarter one, the first quarter of the year. It's coming because the announcement was made in the last quarter, or the phone was launched in the last quarter, and that shows up in the next 3 months. Again, so this is the geographic region, and you can see the half. Traditionally, it was half from America, but then there are other parts of the world. Europe, the greater China is becoming increasingly important, though it's half of the US sales, but that's growing. That's one market that this company has put a lot of effort. You can see they have started advertising, right? So they are chasing growth at any cost. And in terms of what I was telling earlier, iPhone is the thing that builds their revenue structure. So if you were to divide that in terms of the overall, so you'll find that 60%, 50 to 60% of their revenue comes from one product, that's iPhone. Increasingly, they would increase the size of the services. Services is becoming very, very important for the future. But the question that you have to ask, if you were to invest in this company, what's going to happen in the future, right? All these products, iPhone, iMacs, iPad, iMacs are, I mean, they are riding on the success of the reinvention of the company's brand. So anything this company makes, including something that to clean the screen, right? They sell it for 2,000 yen, and that sells like a hotcake. Anything this company does, there is a huge uptick in, and this is the profit part, right? So they are extremely, extremely profitable. You can look at the quarters, the last 4 quarters, and so there is an impact of Corona, clearly. But ever since they've launched their phone, it's been the record high for the last 4 quarters, right? It's just been phenomenal. And that's what is driving. And like I said, it's not a regular, it's not something that is going to happen once we come out of pandemic, right? This whole unused money that households have, which has flown into Apple, that may actually start to disappear. So that's the tail, that the risk that this company faces. And that's why it looks fairly good. The company is looking extremely exciting by all. This is the EPS, right? This is the earnings per share that I showed you in the previous video. And you can see it has gone up tremendously in the 14, 13, 12, 13, 14, and then it has come down. So the company is not actually performing the best. this could be one of the criteria by which you can look at the company's performance. Their best days were 2012, that's after the financial Lehman crisis, to all the way 2014, right? And then it has come down. Now, one of the thing is you can't compare anything that is happening. When you see this chart, you should immediately think there's something happened from 2014. It's not giving you the full story. And the reason is from 2014, they have done what is called the split. They've split the stock, and therefore the number of stocks have grown. And that's why you find, and that's what it says here when you look at the diluted. So from 2014, it has actually diluted. So you can't compare. These are apple and oranges, literally. Okay. Most of the companies in this sector, tech or pharma, the focus that investors put in is on research and development, right? R&D is, you believe, is what is going to drive this company's growth. Will Apple be able to? So they are successively increasing their expenditure in the billion-dollar terms. Here, what you see, they are going phenomenally crazy in terms of how much research they want, because there is an increasing desperation also that's coming, that their product lines, they can refresh it, but they are not path defying, and they cannot, it will become, after a while, it will become like a cash cow. They'll be able to sell those, but at a very, very stable rate. The kind of crazy growth that we've seen with Apple, and which is reflecting on their stock price, it seems very hard for them to keep that performance intact. The pandemic helped, certainly, but this is not going to be a long-term. This is not sustainable. The kind of growth that they've, they booked in, and so they are actually selling more units. That's for sure, and they are also selling high-price, higher-margin products. Right? Some of their products have a margin of $1,200 per unit. Right? That's the margin that they have. Of course, then you think about other costs as well, but still they can make like, I'm sure they're making $600-700 per iPhone at least. That's a huge amount. That is unlike any other company can. I mean, this is something that other companies can only dream of. So that's what is probably, there is this sense that the company has to do more. They have to come out with different products, and that's where they want to go. So the future, if I'm going to invest in this company, I cannot rest. I mean, the company cannot rest on its laurels, and I'm not going to be comfortable with what the company has to offer, right? Number of employees. Again, it's a number that you actually look at, not at a company like Apple, because in case of Apple, the employees, what they are bringing, you have to probably break it down to understand what the company is doing. So employees number 6 is quite useful if you can get the micro picture, like what kind of people, what kind of engineers they are hiring, what kind of salespeople they are hiring, right? In this case, R&D is probably the main focus. Now, Apple, if you want to define, Apple is not a manufacturing company. We all know it, right? They design and they ask others to do the manufacturing, right? So they've got 7 suppliers, they've got about 90 plus suppliers, major suppliers, and they've got 7 outsourcing agents who are producing for them. Apple is essentially a design company. And so that's why they hire a lot of these designers, product designers. And so what kind of people they are hiring? If we can figure that out, this company is extremely secretive. So we don't know what kind of project they're running, but the kind of engineers they're hiring, it can give us a sense of what this company is up to, right? So that's where the number about. So there are detailed numbers about iPhone. I don't want to go into it, but the big picture of is this company cannot rely on it forever. They've done well recently, like I said, but it has become very, very stable. If you look from 2014 onwards, when they announce the next quarter, they get pretty much at a very stable rate. This is the units they are selling, right? So they are selling, the number of phones they're selling, that's kind of become stabilized. And this is the total number of stock, the phone units, the phone models that are in the use, and then the kind of apps, which, by the way, generate revenue for them. Every time somebody pays for these apps, they get a cut out of it. 30% of it goes to Apple. So it's actually good for them that their ecosystem of apps, it thrives, the better it is for them. So revenue for a smaller part of the pie, iPad and other tablets, computers, which is growing, but it's not going to change the world, right? So you have to figure out in that case what this company is doing, wearables. Now, this is something I personally think can actually be the defining product that they are looking at. They have Apple Watch. It's pretty primitive in terms of the functionality, especially if you look in terms of what these wearables can do in the future. All those sort of stories that are created. Apple Watch is the very, it's not even first step. I would say it's a bare minimum half step. Services, right? Services, they can increase the number, but app revenue, this is what they cut in the app sales, right? This is how much money they can make. So in the current year, they're making $85 billion from the app or in-app sales, right? This is their cut, just being a middleman, and this is what is under threat in the court, right? There is the number has kind of stabilized again. You can see this market; these markets are kind of stabilizing. This is one of the places where they can make a lot of money, right? This is the future because Apple has licensed banking license. They've applied for it in the US. And so eventually the companies like Apple, they would replace, that's one story. They would replace all the financial institutions, all the banks that you think of, all the commercial and even investment banks, the tech firms, by the power or prowess of big data. They can actually replace the whole financial sector, insurance industry for once, and the credit market, right? The loans and everything that the financial institutions do today, that can be easily and at a much, they will reduce the cost of running these businesses and also the safety of these businesses. And they would also bring in more people to participate, right? The inclusion part, because a lot of people are unbanked in the world. You can bring them all. Apple, again, the product, because the product is so expensive, it is not going to fulfill that promise. But I also suspect that in the future, they would be actually coming out with some lines. Any company like this should come out with a cheaper brand, a different brand, and thus basically get the data, because data is the what do you call black is the next oil or whatever you call it, right? That's the value. Value number one for any company that has a lot of data or that has potential to get a lot of data, and as long as that data remains unregulated, that's also one tricky part, and it does not fall under the problems of geopolitics, which means sovereign internet countries trying to protect the data of their citizens within the wall of their country, all that. So there are a lot of risk that also comes with the data. But what data allows you, if you are flying quite fast in the world of almost wild west of data harvesting, before the regulation comes, you already get all the data that you need to come up with products and services to design to entice individuals. So that's where Apple has a lot of data of user. And if they can increase the Apple Pay, it's a highly crowded market. But Apple, simply by having a billion plus devices that are in the market, they control so many people, right? They are in, and they will have a much larger data than a lot of fragmented small players. So you'll see that Apple Pay is one big market. The other is, when I was looking at the employees, the new businesses that the company wants to come in, we don't want to go into competitors, because really, effectively, there are companies that look like Apple, but nothing comes close. So if you were to do Porter's five forces analysis, that's one strategy tool that some investors, or I mean, you don't have to really, you can very quickly look at who are the competitors, what is the likelihood of their product being replaced, a lot of these things, their suppliers' position, their customers' position, all those things when you take into account. Competitors is the weakest thing. This applies to Apple, this applies to Tesla, right? The two companies that we have talked, I've shown you in the last video. These companies are effectively in their own unique zone. But the point is that market itself is collapsing or reaching maturity, and they have to come up with new products. So one is finance. Apple going into finance could be one story if you want to latch onto it. The other story is going to be automotive, right? They have, when I showed you the employee number, they have hired thousands of auto engineers for the last 10 years. And it's been in the buzz for 8 years. I think people are talking, Apple is building a car. They want to build a fully autonomous car, and that's not easy. And that's why it's going on forever. One of their major supplier, Foxconn, is building a huge factory, a couple of factories actually, to build electric vehicle. One is in Indonesia, they're talking about it, and the other one. So if they are able to pull that off, car and mobility could be, again, they can redefine it. Maybe it will be hard with Tesla in the lead, and Tesla has such a phenomenal product. Again, it's very hard for anybody to do, to come close to it, because making electric vehicle is not that difficult, because of its modular design, right? It's almost like assembling a computer. Once you know how to do it, you can do it in a different shell. You can change the, the look can change. So yeah, it's much easier, but at the same time, the two most important things that you need is the software, which Tesla is miles ahead of others. Software, the other is the battery power, right? These two things would determine actually which the winners, and also the brand power. If Apple puts their brand on a car, and they're going after this self-driving autonomous vehicle is their thrust, maybe they'll compromise it and they'll come with something like Tesla, and that will sell like hotcake, I am sure, with the kind of brand that they've built, and they can make huge margin. They can put it out. So they have that potential that they can actually increase their earnings, but they can, increase it like crazy. That's possible. And if that happens, then this company is going to be, I don't know where it will go, right? So two markets. The third market that I think, when I explained about the wearable, the third market that is really going to be probably the most interesting to me is the market for healthcare, right? They are trying to include a lot of things which can track you in real time. They have all that data. I think the next step would be for them to become a big therapeutics company, or a tracking company, or a biggest hospital in the world, which is run by the AI, right? Which suggests, based on your real-time physical changes with all millions of markers, right? So if you give it to AI, they can track a million things at the same time, unlike a physical doctor, right? They can look at 20 things and they'll try to determine the cause. But with millions of markers, real-time tracking, AI would be able to tell you this is what is wrong, or this is what is going to happen 20 years from now, based on the way. So the more data we collect on it, and they are trying to do that. A lot of companies are trying to do that. Apple may have a shot at that. So these three markets where they can actually build new products, and then this company would be off charts, really, because what Apple can do in healthcare, I am sure they can give free healthcare, as long as you're willing to trade the free services with your data, right? There'll be watches, there'll be wearable, not maybe watches, there'll be some wearable that you get very cheap or almost free, and then you can basically get healthcare for free if you choose to give, if you basically sign off on your privacy. So this company is, so these are some of the stories, and you can track down each one of these stories based on news items, based on real data that the company is putting out. There is a lot of intelligence analysts. There are intelligence reports about the companies. If you can look all that, if you can, go through all of that, and a lot of it is available freely because people who pay for it, they actually share it online. There is so much camaraderie that's growing online. So a company like Apple, yes, it's a great investment. It could be a great investment target, but if you can make that story. So that's about the growth, right? We are only focused on growth. I think we also need to talk about the risks. The risk in this case is I already said it, their product line that it is looking stale. They can refresh it, but it's not going to give them the kind of upside that that the market, the investors want. So that's one part where this company may slip down. The competition can always come in and kill this company. There's so many, but I don't really see in the interim, if you look at like 5 years, 6 years, within 10 years, I think Apple would be in a very, very specific sweet spot because of the brand value, right? Brand value, because brands, that value, it continues, it transcends the performance of the company. Company may have a bad performance for a few years, but because that brand value, they'll be able to recover as long as they don't do what Kodak did. Or there are so many companies littered, history is littered with corpses of companies that didn't listen to the market. So this is a slide storytelling with the case of Apple about how you can look at the fundamentals of the company. We're not talking about the people. I think in the next videos, we will go in the corporate governance part of the companies, and I'll try to explain how you can get some kind of future prognosis about the company based on that. I'll see you in the next video.